Good morning, everybody. Hey, welcome to Monday, November 18th. Glad you could join us today as we get ready to talk about what's happening in the markets this week. I won't be here much this week. I've got some meetings to go to down in South Florida. But I'll be here today and probably will be here tomorrow and maybe Thursday morning to join us for some stuff. But hey, don't miss Dave. He'll be out there talking up what's happening in the economy as we talk about China is kind of a big deal today. So hang in there, and we will be talking about China here in just a few moments. Let me remind you folks that, hey, the markets are hitting all-time highs. They hit a high on Friday. They'll open at a high today, and well, maybe not. It was high, but now it's backing off a little bit. But so make sure that you've got the right amount of risk in your portfolio. How do you do that? Give us a call at 863-382-0037 and schedule your no obligation financial x-ray review to determine how much risk you have in your portfolio and to make sure it matches up with your risk number. Hey, stay tuned. Dave will be right here.
Hey, good morning. It's 8:38 here, 22 before 9. Let's check in on money and see how Wall Street is treating your retirement fund this morning. That's important stuff. That's why we go downtown to the offices of Statler Financial Services in downtown Sebring and consult Phillip Statler every morning. Phillip, you and I weren't expecting all that terribly much on Friday, but boy, we had skyrockets go off on the indexes, didn't we?
We really did, man. We hit all-time highs. I mean, the Dow crossed over 28,000. You know, they say the next 1,000 points are going to be really determined by the China trade talks. But I think we hit highs on everything on Friday.
Yeah, all three indexes ended up with new records. Dow peaked above 28,000 for the first time. We were kind of stinking thinking yesterday morning, and we ended up Friday morning, we ended up 223 points. NASDAQ was up by almost 62. It's now at 85.40. And the Standard & Poor's up by the better part of 24. It's solidly over 31.20 now. And that just start saying wowzers because we were saying on Friday, the biggest concern is we know from looking at things that no, the economy isn't under a recession by any measure, but the growth curve is slowing down by a bit, and amateurs are getting into it, and we're starting to drive the indexes up a bit, aren't we?
Yeah, we are. You know, we talked Friday about that fear of missing out, and I'm afraid that could be what drives this market a little bit more. We'll know if we get any bad news anytime and it starts to drop real quick. That will shake out those guys pretty fast. But if we don't see that, then we could continue to get this. How did the old Fed president say?
Irrational
exuberance. There we go.
Yep.
That we could see hit this market yet between now and the election cycle next year.
True. You know, that is kind of the canary in a coal mine. Give us one bit of bad news. Do the indexes overreact to it? Because one of the pieces I was reading is that now the growth and the activity in buying the stocks is heavily moving into the direction of the consumer cyclicals, which is good because if we have a good fourth quarter and a good Christmas shopping season, the consumer cyclicals will go up and they'll pace the market. But the thing is, if we have any bad news, those are also the stocks that have a tendency to get bit on the bottom and fall like a rock too.
Yeah, they really are. And so, you know, they got to be careful moving forward as to, you know, you got to just make sure that you're mindful of how much risk you have in your portfolio. You know, Dave, we're sitting down with a lot of our clients right now as we go through our review process. And that's what we're really looking at is readjusting how much risk they have in their portfolio and making sure that diversification between safety and risk meets up with their risk number.
Mm-hmm. Yeah, it's plain to see that 3 months ago, the fringe advisors that were saying, get the heck out of stock completely and just put everything in an old stock into cash that's going to go nowhere, they were overreacting. But you can also overreact on the other side and say, hey, get in, things are going off like a skyrocket. It's a function of managing risk, and that really is the bottom line.
It really is, Dave. And, you know, people look at the S&P 500, they look at the Dow, they look at the NASDAQ, and they say, man, all these record highs. What they don't realize is how much risk is in those individual indexes as opposed to a well-balanced portfolio. And so I think that's what they have to keep in mind.
And that's the trick. I mean, everybody needs some risk in their portfolio because if they don't have some risk, they're not going to have any growth. But you got to keep the balance in there somewhere. And this has been an interesting run for the last couple of weeks, to say the least. Friday, they say, was driven heavily by the story that the Chinese trade deal was getting closer. We were close to signing on the dotted line on phase one. And one of my columnists I was reading over the weekend said basically, well, whoop-dee-doo. Now we're going to make a big headline news out of pulling back and saying, hey, guess what? We won this deal. China's now buying the same amount of soybeans they were 3 years ago. Are you thrilled or what?
Well, hey, I think that's probably good news, right? They're buying the same amount, and so that's a good thing when we overlook at everything. But the other thing that happened um, over the weekend is that the Chinese bank, their central bank, lowered their what they call their repurchase agreement rate for the
Which is
first time.
kind of a little bit like those interest rates that we use to stimulate the economy over here, right?
Exactly, and so it's a short day. It's a 7-day rate. I don't know if we have a 7-day rate here, but it's a 7-day rate. They dropped it for the first time since 2015 by 5 basis points. Now, 5 basis points isn't much, but given that they dropped it, that is what's significant.
And China doing anything that indicates they need stimulus is kind of a reaction that's well worth watching, isn't it?
It really is. The other thing that I saw in that same article I was reading, and we, you and I haven't really, I mean, we knew something was going on. We haven't seen anybody really write about it. And
Mm-hmm.
that's the Fed and the ECB are buying $80 billion a month in bonds to help put money into the economy. And so, again, that's stimulus going into the economy that increases purchasing power, gives liquidity in the markets that cause it to continue to go up.
And you and I made note of that a few Fed meetings ago when they decided not to lower interest rates for a meeting, but it really hasn't been covered that terribly heavy. We're kind of doing quantitative easing all over again without really saying anything about it, aren't we?
Well, that's right. One of the headlines I saw was not quantitative easing, but quantitative easing. Yeah.
Boy, whoever wrote that was a politician, weren't they?
Exactly. Hey, they don't want to call it quantitative easing, but in fact, that's what they're doing.
Absolutely. And bond buying puts money into the economy, puts more bonds on the Federal Reserve's balance sheet, and makes more liquidity available in the economy. And that's basically what's needed. All of that ends up being, well, kind of like heroin for equities. And that's kind of sort of what we're seeing in this process. Anything we should be watching for this week, Phillip, that's likely to affect our money?
I didn't really look ahead that much. I did see that WeWork is going to lay off about 4,000 people. I think we talked a little bit about that. That may be a little bit more than what the initial numbers were going to be. Later this week, we'll have housing starts. And then, of course, we'll have initial claims, existing home sales, those couple of real estate things. And that's really about it. So it's even a short week on economic numbers. And there's probably about, I don't know, I see maybe 150 earnings reports that'll come out this week.
Man, we're at the tail end of earnings season, kind of hitting the doldrums and trading stocks based upon, well, at this point in time, without much data, based upon the rumors of trade truces, right?
Exactly. So it is. It's not really going to be based on the numbers we're seeing out of companies right now. It doesn't look like it's going to be driven by whatever the economics say and whatever the rumors are. You're right. They come out of the Chinese trade talks.
I got you. Speaking of said rumors and whatnot, they managed to drive things up well into green on Friday, resetting the table. Dow was up by 0.8% in one day. NASDAQ up by 0.73%. And Standard & Poor's was kind of in the middle, up 0.77% on Friday. It was a resoundingly good day and much, much better than it looked like in the morning. 45 minutes before we throw money around this morning, Phillip, which way we going so far?
Dave, we've kind of had a reversal. I will say when I first started looking this morning, the futures were all green, looked nice, up, not substantially, but we're up pretty good, 40, 50 points on the Dow. Well, we've kind of reversed that around 825. I'm not sure exactly what people saw about 825. I didn't see anything come across my header, but something happened because everything turned around and went negative. Now we're back kind of mixed. The Dow is basically up $2 flat, actually just went down one and a half. So, it's going to be fluctuating in between. We got the S&P 500 down $3, the Nasdaq down $8.50. So everything is red right now on the indexes. Now, when we look at commodities, we're not a whole lot better there this morning, Dave. We got silver down about 1/3%. We've got gold down about 0.2%. And we've got crude oil down 0.75% to $57.38 a barrel. Now, that's quite a bit higher than what it was on Friday when you and I talked.
I was going to say, I think weekday over weekday, that was still an increase, so it's not necessarily good news. I think the only thing that I could find in my ticker that could have put us downward is Manchester United missed their estimates, and you know that's going to be an earth mover over in Europe.
Oh, yeah, definitely. Definitely an earth mover there, Dave.
Yeah, soccer team screws up. That's the end of the markets over there. World markets this morning, by and large, Asia kind of followed our party and everybody closed up. We're mixed over in Europe. The Great Britain markets are up fractionally. Germany is down by a little bit. Some of their investors are not overly happy with easy money over in Germany. They're getting a little nervous about overreactions from the ECB. Phillip, somebody need to react to our markets the way they are and react productively. That takes advice from somebody with ice water in their veins when we talk money. How do I find you for that advice?
Dave, you know, now I've been talking about this for quite some time now. Folks need to make sure that they know how much risk they have in their current portfolio. You know, unlike the street out there who just takes a simple, you know, risk tolerance questionnaire, we do more than that to come up with a risk number and determine what that looks like compared to your current portfolio. You need to know what your risk number is. Is it a 15? Is it a 50? Is it a 75? You need to know. Give us a call. Let us help coach you into and through retirement by calling 863-382-0037. Check us out on our website, statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back again here tomorrow morning, same time, with a look at what's affecting the money tomorrow. Phillip, thank you so much. I appreciate it. We'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done?
Hey, folks, again, I want to thank you for joining us today. Please don't forget that having too much risk in your portfolio could be very dangerous for you. You need to know what your risk number is. And to find out, give us a call and we will walk you through our process of the financial x-ray. Call us at 863-382-0037. Hey, have a great day. I look forward to talking to you again tomorrow.